Hi, good afternoon. If you are listening to this, that means you're curious about where we're at in the market and what kind of action should you be taking or what should you be preparing for in the mortgage and real estate market. We had one of the craziest times that I've ever had, except that one time when it was 2008 and the market completely crashed. This is like a momentous time in mortgages. Some lenders and some originators, loan officers, locked more loans in 1 week than they did in an entire year. An entire year. And that is not some loan officers. That's a big portion of loan officers. I think that we locked about 20 loans. That's gathering documents, getting people's files in, processing it. There's hours and hours of work that goes into getting a file ready to upload and get it locked. So pretty interesting time. This week, what happened is there was max, like literally everybody was at max capacity. In order to slow the flow of mortgages being submitted, lenders started raising their rates. So we had reached out to so many people and, do so. I do that on the regular. If you're getting a call from me, it's not just a random call to say hello. Well, sometimes I do, right? Happy birthdays and things like that. But I'm usually calling with a purpose to let you know of an opportunity that I recommend that you take advantage of. And so this week, I think I locked my last loan yesterday. It was kind of a hedge lock just in case the market continued to go up. I think things are going to kind of settle down. For some people, 3% rate makes 100% sense. A 3.5% rate, not so much, right? If you already have 4% and you just refinanced and going down to 3.5, maybe you save $150, but it's costing $3 or $4 grand. Maybe that's not such a great deal. But at 3%, when you're saving, $250 a month, yeah, that makes sense, right? So I wanted to tell you what to do right now. Get your credit in order. To take advantage of those the higher appraised values. We're coming to this really unique time where values they're at an all-time high. We have not yet had a correction. The market is on fire. The amount of home buyers that are hitting the internet looking to get information in many sectors has doubled. So there are lots of people out there. These low rate environment has really stimulated the market. What's going to happen is we're heading up to a bit of a frenzy, and we're seeing bidding wars. We're seeing on a good house, you're up against 7 or 8 offers. And that really sucks because a lot of my people are doing an FHA loan and, they're coming up with 20 grand. That's a lot of money, but they're not coming up with 20%, they're not coming up with $100,000. So it's tough, it's tough to compete. And so number one, if you're going to get out there and you're going to buy a house, do it smart, get your credit scores as high as possible. Buying a house makes sense. That golden rule that I have, if the mortgage payment is at or around or a little bit higher than what rents are buy 10 of those houses. Number two, credit scores. Get your credit scores up in preparation to refinance. Conventional loves high FICOs. Last week, I locked a loan, or maybe it was Monday, I locked a loan at 2.8, 2.7 or 2.8. The guy had an 800 FICO. He listened to me all this last year. We'd go back and look at the rate. And it just wasn't quite time. And I called him. He came down, gave me his paperwork, gave me full authority to act on his behalf and lock the loan. And I locked the loan. And he's saving like $350 or $400 a month. And we did it in a low cost basis so that in 7, 8, he's saving so much money in 7 months when the rates go down again. And I really think they're going to, he can refinance again full heartedly knowing that he didn't waste his money. So that's the kind of, that's the kind of loans that I'm doing right now, that I'm helping my clients weed through. So I do think rates are going to go lower. Right now, we were just nicely going down, and then all of a sudden, it went down, right? And then it went back up higher than when we even started because of all the lenders, correcting their rates so that they could slow the volume of loans because people were just buried. So if you want to refinance, give me a call, send me your mortgage statement. It all starts there, right? From a mortgage statement, we look at what the loan balance is. I'm going to look on title, see what your taxes are, see if it's been reassessed, and we're going to go from there. And I'm going to put you in something that makes sense. And sometimes if it makes sense to me, it doesn't always make sense to the borrower. Like I had a guy, he'd been waiting to switch out of FHA to get rid of that terrible mortgage insurance. And I could have done him at 3%. You know who you are, Mr. Quinones. And it just wasn't enough savings for him. He was going to save like $300 and he just thought it wasn't enough. So, it's a personal choice. So I'm going to give you my opinion. I'm going to tell you what I think you should do. And you're going to do what you think you should do. And it's all going to work out for the best. Now, I want you to be prepared for the future. If you have an opportunity to save money right now, do it. It's purely because of the values, right? The values are high, rates are low. I think through the end of summer, it's going to still be gangbusters. But after that, this whole coronavirus thing, it's going to affect the economy so immensely. There's so many people already not working as a result of this. So what happens is, even if the rate is like 1.5%, it won't matter when people are afraid. It won't matter when people are afraid and people are losing their jobs. Remember back in 2008, when we got into like 9-10, the houses were like 60%, 70% discount, and people weren't buying. And they weren't buying for a couple of reasons, because they didn't have a job, number one, or number two, they were scared. They didn't know if it was a good time or they didn't know if it was a right time. So going forward, there's so much uncertainty. What you can do, maybe you could refinance, cash out, pay off all your debt, and put a little cushion to the side. Rate and term refinance, get that credit as low, or get the rate as low as possible, maximize your savings, and pay down your credit. Pay down your credit and operate extremely conservatively moving forward with all this uncertainty. So I hope I brought some clarity to a very unclear time. And I hope that if you're looking for advice to buy, sell, or refinance, that you would remember how important you are to me. And if you're an agent and you're watching this, how important your clients are to me. We all become a family after we do a transaction together. Most of us anyway. And, we're all looking to take care of each other now and into the future. So remember to be supportive of small business. Remember to like and subscribe below if you're watching this on my YouTube channel. And love you. Give me a call. I would love to hear from you. Teresa Timms, a SoCal Loan Pro at 909-920-3500.